Hello, this is a TradeSite trade overview. I wanted to talk today about Fslr, that's First Solar. You can see it here on the chart. This is the 65-minute chart of Fslr. We use the 65-minute chart for longer term looks at stocks because it breaks the day up into 6 equal segments as opposed to using 60-minute charts where you have 6.5 bars of data. So the 65-minute chart really breaks the day up into really clean breaks for us to look at. Now, this is over the course of 2 weeks, the FSLR, and we like to look at these types of patterns. This is called a basing pattern. It's a fairly basic pattern, but there's a lot of construction in this pattern that you need to be aware of because this is the type of pattern we look for on all time frames all day long here at TradeSite. So what happens on this pattern is you get this big push up back on the 9th. Okay, big news day, and then this is granted a very huge move from $29 to $39 on FSLR from that news. That by itself is sort of off to the side, but it obviously denotes something strong going on in the stock. And as we look at it over the course of the next week, it's a very solid basing pattern. Really doesn't get much. It's really holding whatever news that was well, and it's going sideways. And now that what that gives us is a breakout point over the highs, which is this blue line that I've drawn right around $41. And you can see the basing action goes on here for 7 or 8 days, and then we sort of start to drift upwards. So it's getting stronger, get a little sideways basing action right here before we get up near that blue line. This is all what we call really good construction. Okay, what this means is that obviously there's been some positives on the stock. The bulls are in charge, the longs are in charge, the people that want the stock to go up are in charge. They're not letting this thing pull back. They're continuing to buy it despite the big jump in price. And anybody who's short has gotten no signs of relief. And so today, which is Wednesday, the 24th of April, 2013, as I slide this chart forward, you're going to see that the stock actually ran and broke out. Now, this would have been a nice breakout play, but what I want to do from here things. This is just today on the stock. I'm going to add what we call the TradeSite Comer tool. Okay, and I'm also going to add a tool that we call the gap fill threshold tool here, and or a pressure threshold tool. This is something we use at TradeSite. And basically, what this does is it draws a couple threshold. Now, this is used in stocks and futures relative to gaps in the market when the stock opens for the day. If it's gapping away from either direction, away from the close of the prior session, we use this level to determine sort of whether or not we think we're going to come back and fill that. The faster you get above this line, the less likely it is that you're going to come back and fill the gap for the day. Keep in mind that 80% of stocks fill their gaps the same day, but this is a really important calculated level that helps us identify the 20% that don't. And keep in mind, you can see right here, this blue line, that was that breakout line. So we're opening right at the breakout line on a gap up, and we immediately push higher. That's such a long, I mean, it was 2.5 weeks of sideways basing action. You've got the shorts on the ropes. If there were shorts, whoever they are on the ropes. Obviously, the longs are in charge, and they want this thing to go higher. And what's interesting is you do get this nice breakout. You get above the pressure threshold quickly, and that's sort of your indicator that this breakout's real. We're not going to give you the opportunity to come back and touch yesterday's closing price. If you want this stock, you sort of need to get in it now. And by the first bar or two, you really already know that. You've gotten the confirmation. And look what this move turns into. And then from here, let's identify how the move played out, because we end up getting a new 9-bar setup. This is on our Comer tool. New 9-bar setup right here. And that starts the Comer count, which gets up to the 13. At 13, this is sort of our sell signal. This is the reversal indicator that this energy is exhausted. And with that, we get a pink risk line, which sort of says this will be the wall. Even if we try to push higher, it's going to have a hard time getting through this level. We get all that information right off of our tool. So we know going into the day, we've got a nice pattern over several days. We know we get the gap up and get through that pressure threshold early. That gives us a lot of energy. The bulls are in charge. And then we get this count that sort of identifies where the stall out point might be and where the top really, it would be really hard for this stock to get through this price level. And look how precisely we end up using that high. That's called the Comer tool. Again, this is something only eSignal 11 can sort of has the power to calculate out for us and show us exactly and graphically where to expect it to top out for the day. So your trade's basically given to you by these tools. It's a really nice setup, really nice play out during the day.